All right, stock market 1 to 3 month view. You know what I do? I look at a few charts in here. If you want to see all of my analysis on the major markets, I'm going to invite you. This is one invitation that you don't want to miss. Analysis of 5 major markets I'm going to do live. I'll take the regular charting and compare what this other dimension is of cycle analysis and do it on the stock indexes, bonds, gold, and oil at the Wealth365 Summit. Over 50 speakers in 6 days. It starts this Monday and on the 17th. I'm speaking Thursday, January 20th at 10 a.m. Eastern Time. I'll do this presentation, and we're going to give away in a drawing, Wealth365 is doing this, a cycle analysis workshop worth $1,297. So please do sign up. You can sign up using the link in the YouTube description if you're watching this on YouTube, or the Twitter post that we'll put up. And members have already received an email with that link, so make sure you take advantage of it. Analysis of 5 major markets at the Wealth365 event. I'm going to do that this Thursday, January 20th, 10 a.m. Eastern Time. All right, let's take a look at the stock market. We'll take a 1 to 3 month view of the stock market here, and we're going to look actually in a reverse order, because I'm going to take it from weakest to strength, from the Russell to the Nasdaq to the S&P 500. So let's take a look here as we switch over, and this is the Russell. And of course, you're looking at cycle analysis right in here. And what you see on the bottom, if you're brand new, are cycle brackets. These essentially are a look at the rhythms in the market, the heartbeat in the market. And this is what's called a harmonic family, where you have a dominant, an intermediate, and minor cycles in there. And the minor cycle that you look right there is about 11 weeks long. This is 22 weeks long right over here, and this is 44 weeks long. I'm sorry, 66 weeks long. So let me make sure I tell you this right. This is 22 weeks long, 11, and 66. For those of you that are learning how to do this. Now, you'll notice that this cycle right in here is a neutral cycle. It moves sideways. This one, it didn't quite take out that low, and then this one just barely took out that high and began to move down. So you have a neutral cycle right in here and a neutral cycle. Now, this big dominant cycle, if it was exhibiting a large upward force, it would not allow this to come down as far as it did. So that low right over there on that cycle, and you could see the nesting of the minor and the intermediate right there, was at 2107. It rallied up here into the sell zone and bullseyed that and began to pull back. If it breaks under 2107, it is going to say that all of these cycles are pointing to the downside, and that would point to a collapse. So, I don't use the word collapse easily. I don't use the word crash very often at all, but this is an example of the type of setup that puts huge pressure on the market on the downside. See, this right over here is the reversal scout. That's our proprietary momentum indicator, and also helps us with the cycle analysis. That's where the negative momentum occurred right at that point, and it is, you see, negative right in here. Under 2107 will confirm a bull market top. And that would be a really bad thing, of course, if that happened. Now, it could break under here and then bounce up again, and you can see what we're looking at in here are the rhythms right in here. But really, we're projecting down when this is all over with, maybe as low as 1830 that you see right over there. And yes, bear market. It has a bear market look to it. To fix it, it would need to move over that 2290 area. It's a long way on the upside. That's what would repair this situation. So we'll say that the probabilities of that are extremely small, and that the Russell is looking quite negative. 1 to 3 month view would be maybe some bouncing around in here and then coming down at some point, breaking 2107. If it broke under there, we would look for the short term at about 2031, and then a bounce into this area. We have March, around early March is the time for this impulse on the downside to end, an attempted rally, and then down again in some significant way. We actually don't have this projected as deep as I really think it could end up looking at that. Let's take a look now as we switch over to the Nasdaq and the X, and this is the next weakest one that we're going to look at right in here. And the Nasdaq, you can see right here is where that momentum turned negative. It's a lot of lines laying in there, so it's a little hard to see that momentum is negative. Came into this support zone right over here, is trying to hold in there, and you could see the minor cycle right there is where it bottomed right here. The next cycle rallied and then failed and took out that low. What that says is that there is a deep sell-off coming here into March, and the downside target best case is around 13,850. So the next 1 to 3 months really is attempted rallies and support over here, but then we believe a really hard sell into late February and into early March. That aligns timing-wise, of course, with what we showed you in the Russell just now. Now, S&P 500 is stronger as the heavier weights of the industrial stocks are playing in here as money moves into those industrials or financials, but the financials starting to fail a little bit right now. Here's the momentum, flat, as you can see. It's trying to move down, trying to move up, couldn't do that. This is your key, 44.95. If it breaks below 44.95, it declares a major top. Again, these declines point to the potential of coming down to under 4,200 over here. If it was a super bullish condition and just correcting in a mild way, maybe you get support under 4,500. That's 44.82, 44.92, right in there. Those are spots where it could stop, but really believe that you're going to get a harder sell right over here to the major 23, which is right around 41.80, 41.90 there. So a lot of risk. Some of the evidence that we're looking at when we look at all of the time frames and all of the momentum conditions says that the stock market is in some trouble. Right now, we have breakdowns in the Nasdaq, we have breakdowns in the Russell on the shorter terms, and that really is suggestive with negative momentum in those that it's going to exhibit a lot of downside pressure. The S&P 500 stronger, and that is representative of the great rotation that is going on right now out of growth and out of low caps essentially into these kind of solid industrial companies and financials and energy. Certainly that's likely we're going to see that for a while, the rotation that's going on as the market does build this top that it's in. And of course we're looking for this hard sell that we've been talking about in this period of risk that comes somewhere mid-January to early March. That period of risk, anytime in that window, we could see some very hard selling coming in, and the bottom of that impulse is suggestive to be right around the end of February to the beginning of March period. That's a time when there is the greatest risk. That's the S&P 500. I hope you found that just absolutely fascinating.